Alright, what's going on, people? It's time to start this YouTube channel for real. Alright, my name is Munir. I've been a profitable day trader for about 1 year now. I just started learning about a year ago. I was a student athlete in college, so I was a runner that took most of my time. But enough of me, let's get into this video. So, this day trading strategy that I learned was from a few different people: Thomas Wade, Mac, and that's pretty much it. I'll link their descriptions in the bio. But at the end of the day, I'm here to help everyone out and just grow this community. So I think the best way just to get into the first lesson is just to pick a random day and kind of go through what my mindset is um, on a given trading day. So I'm just gonna pick a day from last week. All right, so this is right after the 4th of July. So this is July 5th. So I usually wake up around 6 a.m. I don't do any pre-market trading, so this right here is about 6:21. So obviously you can see that there's a downtrend. So I'll go in and kind of draw a trend line like so. So with this strategy, it's all about just trend lines, resistance, and support lines, and what are second entries. So obviously I'll get into that in a second, but second entries are basically based on the psychology of the market, and the markets usually try to like to do things twice before they fail or are successful. So as a scalper, which is the method that I use, I like to go for 1 point scalps in the S&P 500 futures, which is what we are looking at right here. So for every 1 point scalp, it's equivalent to $50, and that's based on one contract. So if you're going for 10 contracts and you're scalping for 1 point, that would be $500. Obviously, it goes the same way for risk, but that's all part of the game, baby. So if I'm coming in and sitting on my computer and seeing this market, obviously there's a downtrend, so we're going to be looking for shorts, and in particular, we're going to be looking for second entry shorts or failed second entry longs. So if we count from the new high right here, we're going to see if we can find a failed second entry long. So we're going, the next bar broke below, broke below, broke below, broke above. So as soon as this first bar breaks above the previous one, that's a first entry long. But obviously, we're concerned with this downtrend, so we're trying to trap people who are trying to go too long too early. So going again, going again. So as soon as this bar breaks below that, now it gives the opportunity. If another bar is to break above the previous one, then that would be considered a second entry long. So let's see what happens. So once again, we're looking at a new high right here. It goes down. First entry as soon as this green bar breaks above this one. Then we're going down, and this doji looking bar all the way on the right broke above this one on the left of it. So that is technically failed second or a second entry long. If the next bar is to break below this one, all the traders who went long above this bar, who have their stop losses below the one to the left of it, would get trapped. So in in this context, a good trade would be to sell below this doji bar, trapping all the traders who went early too long in the downtrend. So let's see if the trade would have worked out. And as you can see, it actually wouldn't have worked out. Now, the reason that it didn't work out is for several reasons. First of all, as you can see, it's not a very good trade because look how many bars are stacked. Well, there's one, two, three, four stacked. So this is really like a mini congestion. And also, when you're dealing with a doji looking bar, there's always going to be an added risk as well as going short at the low of the day. So not only that, it's also very far away from the EMA, and it's not bouncing off this trend line, which we would like to call a key entry point if it did. So now let's look for some shorts. So as we can see, this bar's low is the same as this one right here. So we always reset the count when there's a double bottom. So when we look for shorts, or second entry shorts, we're gonna count from the lowest low, and then just like the second entry longs or first entry longs, as soon as a bar breaks below the bar below it or previous to it, then that would create a short opportunity. So this bar right here is the new low. So as soon as one bar breaks below one, then it would be a first entry. So this bar broke below that, so that's a first entry short. And this bar broke below this one, so it would be technically a second entry short. And where we would enter this would be below this bearish looking bar, which really isn't that bearish, even though it's red and closed below its open. You can see that it closed pretty near its top, so it wouldn't be that high probability of a trade. You could take that trade, but it would have worked out this time. But I would much rather wait for a lower high, which comes here, and that looks like a very good trade to me, and it would have worked out as well. So now you can kind of see that we're getting towards 6:30, so the opening of the market, Pacific time, but there's a lot of support in this area, and it looks like a lot of congestion. So you kind of want to stay out of that, especially at the open of the markets, when there's a lot more volatility. So we're going down, and we can see that this wide-looking trend line obviously has a break. So the rules for trend lines in the strategy, and always in pretty much any market, whatever you're trading, forex, futures, stocks, options, when there's a break and a new low, or a break and a new high of an uptrend, or a break and a new low of a downtrend, then you're going to look for two things. You're going to look for a reversal or congestion and a mini trading range. So let's see what happened here. So here's one leg to a new low and two legs to a new low. But you can see that this is looking like a pretty strong downtrend. So when I'm trading and I see this, I immediately want to shift gears and start looking for an even wider downtrend, like so, because you're always going to look for trend lines that allow for the most touches possible. So as you can see, this is a lot more touches than what I previously had, and we're still gonna be looking for failed second entry longs and second entry shorts. So if we're going here, this is about 635. Here's a new high, right below. This bar broke above that one, so that's a first entry long. And this bar broke above that one, so that would be a second entry long. Now, once again, we can see that there's a lot of support right here, and if we did take a short below this bar, then we would be going short at the very low of the day. But I do like this trade for a couple of reasons. First of all, look at how bearish this bar is. Also, it's at the key entry point. It's bounced 1, 2, 3, about 4 times. And we're also looking for a new low of this short-term downtrend. And as you can see, it would have worked. So let's see if we can find any for second entry shorts. So once again, counting from new low, that would be a first entry short because this bar barely broke below that one. And this would be a second entry short right here. Now, this is a very bearish bar once again. However, it is in the middle of the EMA. So I would have skipped this trade, but it would have worked out in this case, but can't guarantee that. Okay. And now we can kind of see that this is looking like a bit of a break. This is the break, so once again we're looking for a new low. So we're looking to at least get down to here. And once we get it, we can see that the market's getting a little weaker and a little weaker. So we can see that there is a trading range structure kind of going on after the break of this trend and a new low. So now when we look at ranges, we always want to fade the breakouts, also known as a failed breakout. So once we see this, we want to switch gears and stop looking for shorts, but look for the high probability setups that are either at the top of this range or below this range, and we want to fade the breakout. So if it fails out the top, we want to go short, and if it fails out the bottom, we want to go long. It does seem counterintuitive. At the top bottom of the range, you want to go long, but at the top of the range, you want to go short. But this is because of just resistance and support lines, which institutions and day traders like are all looking at. So when we get here and we can see that we're at the top of this range, we want to see if there's a good signal bar to allow us to go short. And also, we want to pay attention to this mini uptrend. So obviously there's an uptrend here, a break, and a new high. So in that case, because there's a break and a new high of the uptrend, we want to look for shorts or at least be aware that there could be a reversal combined with the fact that we're at the top of this range. So once we see this bar, it is a very tempting short opportunity. So let's see if that would have worked out. And as you can see, it would have worked for a scalp. And also, this is the lower high right here. However, it is a very neutral bar. So it could have worked out, it would have worked out, but not as high probability of a trade as we would have liked to see. As you can see, we're still going very range-like and very choppy. You kind of want to stay out of that as much as possible, even though it could be tempting. And also, you want to look at the bigger picture. So see how I'm zooming out. We traded all the way from the top down here, and we got into a range. So it's logical to assume that we would trade back up. Obviously, there's nothing certain in trading, so it doesn't have to do anything, but let's see what would have worked out. So here we see that there's a strong momentum coming out of this range. And now we want to switch gears. Instead of looking for shorts, we kind of want to look for longs because once there's this first break in the trend line, we want to search for a new high. So that would be a first entry long right here, right there, when this bar broke above that. And it's also off the EMA, but we're looking for second entry longs, which are much more high probability. So we're going to have to just sit on our hands. Now, technically, this is a second entry long right here if the next bar breaks above it, but that never happened. So we want to shift gears once again and start looking for shorts now that we broke below the EMA. And as you can see, the market kind of went without us, but that's okay. And we kind of get into some more choppiness. I really don't see any good looking trades right there, but we can even extend this range and even add a little more just to give us a little context to what is exactly going on here. But like I said, you really want to stay out of this junk. But once there's momentum, just always draw your trend lines, no matter how wide or skinny. So once again, we're looking for second entry long. So here's a new high. Once we see a break of the trend line, we want to at least see a new high that. So there's a first entry. Second entry long, right near the resistance. Great bearish bar. It is a tiny bit away from the EMA, but that looks like a very solid trade to me, and it would have worked out. Once again, a lot of choppiness. And now we're getting towards 9:30. It's about 3 hours on the market, and momentum usually slows down a fair amount. But as we stated before, what we were expecting was to at least try to test these highs of the day, which eventually we got pretty close to. So let's see if there's any more opportunities later in the day. So once we're here, we kind of see that there's a nice looking trend right here that's forming. So we want to look for second entry longs at the key entry points as stated. So here's a new high. There's a first entry right there because this bar broke above that one. And because this bar broke below that one, it gives the opportunity for a second entry long should the next bar break above this one, which is a great looking bar to me. So how we enter this trade is we want to either buy a market order above it or put a limit order, but our stop loss always goes one tick below the signal bar. In this case, the signal bar is very bullish, and it would have been a great trade. And at this point, we're getting towards the end of the day, and I really don't like to trade this because volatility really slows down and you can really get trapped, but it is good to always just see what kind of context was going on. And to me, it seems like there weren't really many very good trades to end the day. So that's going to wrap up my video. I pretty much winged that, but it is what it is. Let me know if you guys want to keep seeing any more videos. I'm going to try to keep pumping them out. I've got a lot of free time now. I'm graduated, and I just want to make content. I'll definitely get a lot better and plan more videos, but let me know what you guys think, and I appreciate it.